Every business owner focuses on making money. The wealthy focus on what happens after they make it. Because when your structure is built right, every dollar you save in tax becomes a dollar that can keep working for you. That's the wealth loop, the system that turns tax savings into income and income into new opportunity. Structure lowers how much leaves your balance sheet in tax. Those retained dollars become reinvestment capital. That capital funds assets that generate income and new deductions. And those deductions create the next round of savings. That's what separates growth from momentum. Income grows in straight lines. Structure compounds in circles. Inside every Quantus plan, we build what we call the business beyond the business. It's where the savings created by structure get redeployed into income-producing, tax-advantage opportunities. Oil and gas partnerships that generate deductions. Real estate and cost seg projects that accelerate depreciation. Agricultural operations, gas stations, and car washes that generate active income and deliver powerful upfront write-offs tied to real operational investment. Each of these investments feeds the next turn of the loop. New deductions, new income, new liquidity. Your business becomes more than an income source. It becomes the engine that funds life beyond the business. We worked with a client who's paying nearly $500,000 a year in tax. After restructuring their business, we built a strategy designed to run the loop year after year, continuously capturing savings and turning those savings into new capital. Instead of parking the retained earnings in cash, they redeployed them into the business beyond the business. Over time, those reinvestments created momentum. Each year, the savings grew larger and the effective tax rate dropped lower. Not because of one move, but because the loop kept turning. That's the compounding effect of structure in motion. And it's not just about income, it's about protection. Each investment sits inside its own entity layer, insulated from risk. That means the same structure that fuels compounding also shields it. Not only keeping capital from the IRS, you're keeping it safe from litigation, loss, or liability. That's how wealth endures. Most people see tax planning as something that ends when the return is filed. We see it as the starting point of an ecosystem. Because when structure creates flow, wealth stops being static, it becomes alive. The wealth loop is proof that smart structure doesn't just save money. It builds machines that keep making it. When every dollar you keep fuels the next opportunity, wealth stops being a number and becomes a system. That's what we build at Quantus. Not tax plans, wealth engines.